Welcome to the Pretty Good Policy for Crypto podcast, where we have in-depth discussions on cryptocurrency policy and regulation. I'm Paul Brigner, and I'm head of U.S. policy and strategic advocacy at the Electric Coin Company. In a few moments, you will hear from my colleague, Gary Weinstein, head of global regulatory relations at Electric Coin Company, and our guest, Brett Quick, head of government affairs at Crypto Council for Innovation. We believe in fostering a respectful and inclusive environment for our discussions. And while we at Electric Coin Company hold strong opinions on the need for private and confidential financial transactions in crypto to promote economic freedom, our guests may have differing views. Through these thought-provoking and at times challenging conversations, we aim to deepen our understanding of complex policy and regulatory issues and work towards the development of pretty good policy for the cryptocurrency world. This podcast is for educational purposes only and is not legal or financial advice. Our guests' remarks may not reflect the views of their organization or of Electric Coin Company. Thank you for joining the podcast. We hope you enjoy it.
I'd like to welcome Brett Quick to the PGP for Crypto podcast. Welcome, Brett. Brett is the head of government affairs for Crypto Council for Innovation. The Council is the premier global alliance advancing crypto innovation. As our audience appreciates, crypto has immense potential to spur international economic growth and create jobs, improve financial inclusion and access, and enhance privacy and security. By sharing insights, expertise, and the facts about the global crypto ecosystem, the Council supports governments and institutions worldwide in efforts to shape and encourage the responsible regulation of crypto in a way that unlocks potential and improves lives. Brett brings considerable public sector experience to Crypto Council for Innovation, having worked in the U.S. House of Representatives and U.S. Senate in key financial services roles. As staff director of the Senate Banking Committee's National Security, International Trade and Finance Subcommittee, and deputy chief of staff for the House Financial Services Committee, Brett worked across the financial services ecosystem on Capitol Hill with the administration and across party lines in order to achieve lasting policy goals. Most recently, as co-head of government affairs for the Financial Services Forum, Brett has coordinated the macro-prudential regulatory strategy of member companies with Congress and the agencies. Welcome, Brett.
Thanks, Gary. Glad to be here.
Thanks a lot. So let's start and dive in. Can you give us an overview of the Crypto Council for Innovation and its mission? I'm particularly interested in how the Council works with governments and institutions to shape responsible regulation for the crypto space.
Sure, happy to. So the Crypto Council for Innovation was really formed, I guess, about a year and a half ago. Really in earnest, kind of got up and running about a year ago with the onboarding of our CEO, Sheila Warren. The council is a global alliance of 10 companies that really came together to advocate for responsible, thoughtful regulation for the industry. So our primary objective really is to advance regulation, which is a little bit of a unique circumstance for some industries. Oftentimes in Washington, you have industries that are coming to say, please regulate us less. In the case of crypto, we are saying we would really benefit from regulation for a variety of reasons, which are probably obvious to many of your listeners. But we want consumer protection. We want investor protection, both so that consumers are protected and people don't experience harm and losses. And also because there's confidence that comes with that consumer protection for folks to, get into the technology and into the industry. And the industry needs clarity and transparency in order to grow and develop here in the United States, in order to keep innovation here in the U.S. That's what's needed. We've lived in this sort of environment of regulation by enforcement for so long now, and it's not getting the job done. And we're really at risk of losing, our innovative edge in the U.S. to other jurisdictions that are really trying to harness the technology. So that's sort of the main objective of the Crypto Council. We have a curated membership of companies that are really typically more developed and more mature in the space, really good actors that are trying to build and really create some really fascinating, revolutionary opportunities for consumers and businesses in the United States and beyond.
Thanks a lot. I think that's quite fascinating, the dynamic between regulation, over-regulation, protecting innovation, keeping innovation for United States development or chasing it overseas. And we can come back to that. I'd like to explore that topic a little bit more. I think it's quite important. But perhaps first, one of the reasons why we wanted to have you on the PGP for Crypto podcast is you've had a fascinating journey career-wise. Can you tell us a little bit about that journey from working in traditional finance and government roles to become the head of government affairs for the Crypto Council for Innovation? What motivated you to make that transition?
Sure. Well, as you said, my previous life, most recently, I was co-head of government affairs for the Financial Services Forum for about 4.5 years, and that, for folks who aren't familiar, is a trade association that represents the 8 U.S. GSIBs. So really, the shorthand way that you can think about it is the 8 largest banks in the United States. And the forum is really focused on capital standards, liquidity standards, really sort of whatever the Fed is up to is kind of a simple way of thinking about it. Really fascinating subject matter, really interesting members that have such a critical role in the global economy as well as in the United States. But I've spent my entire career really in financial services and banking, both on the Hill and in the private sector. I think I'm now to the point where I'm half and half. I've been off the Hill as long as I was on the Hill, which is fun. But I was sort of in that position in traditional finance, as you said, thinking about, where are things headed? Where are things going? Both from a Washington policy perspective and from just sort of a personal, what's the future of our economy and the way that we do things. And I felt like this whole idea of crypto, of digital assets was getting so much more attention, so much more interest from members of Congress, from their staffers, from the Hill. When I was on the Hill, I left in 2016. Crypto was like a glimmer in the eye of a few members and maybe a few staffers. It was not something that was ever really discussed. And that's obviously changed so much over the past few years. So I was just seeing this, increased attention on crypto and the possibilities and the need to legislate and regulate around it, both from crypto skeptics and both from, supporters of the innovation. So as a government affairs person who's worked in these policies for so long, I was sort of identifying this as an opportunity to have an impact and in a place where there's going to be a lot of action and a lot of interest. So it was really kind of interesting to me to be involved in that, sort of be in the trenches on doing some of this important work to really kind of write the rules that are going to inform the way that things happen in the U.S. Over the next, years to come, decades even. So that was sort of my professional lens of looking at being in crypto. And then personally, I'm not having a tech background. I do believe that, the technology associated with blockchain and the idea of sort of decentralizing things and disintermediating the way that we do so many things, that's where our economy and our society are headed. We call it the digital future. And I think there's no question that technology is going to take just a much larger role in the way we do everything. We think about 15 years ago, you couldn't have imagined everything that you use your iPhone for. I remember it was probably, 2006 or 2007 when I got my first BlackBerry that had a browser on it. And it was very slow and you couldn't do much, but it was there and it might work for you to look up something if you really needed to. And over the past, what was that, 15, 16 years ago, you couldn't have contemplated back then how much that we would pay our bills on our phone. We have a calculator in our pocket all the time, even though our teachers told us that we would not. So I think that there's no question that the adoption of the technology is going to become more rapid and we're going to do things in a more decentralized way. So from a personal perspective, it's really interesting to me to be involved in that and get to help to shape, how that's going to happen here in the U.S.
When you go from a glimmer in the eye of some legislator and policymaker to what has now become a force of innovation and disruptive innovation at that, I'm really curious to learn a little bit more about how your experience in traditional finance and public sector roles informed your understanding of the crypto industry. And what unique insights do you bring from that background to crypto regulation and policymaking?
Yeah, well, crypto is a nascent industry, both as a whole industry and certainly from a Washington perspective. It's really just been about 2 years. I think that crypto has really been focusing on Washington post-infrastructure bill, and realizing that there needed to be a tremendous amount of engagement here, and that's certainly happened. We've seen a lot of that. But it's not a well-established sort of advocacy apparatus as we have in traditional finance, and certainly with the banks in Washington. They have sort of a well-oiled machine to a large degree of the different trades and how they have their lanes and how they collaborate and work together, and how they interact with in-house folks at the firms, and they really have a lot of that sort of established and sort of ironed out, having been doing it for so many decades. In the crypto space, everything is new. The folks working on these issues often are new. I mean, I've only been in crypto for, 8 months now. Sometimes it feels like 8 years, and sometimes it feels like 8 minutes, depending on the day and what's going on. But it's sort of, my CEO says we're building the plane while flying it. I think that's true both for CCI and for the industry at large, because there's so much that's being established and new people are coming in all the time. We're figuring out how best to work together, how to all sort of, row in the same direction and make sure that we're being effective in our advocacy, and kind of, finding areas where we can collaborate, and identifying ones where we disagree and figuring out how to address those. But it's been fascinating. It's been a wild ride. It's been super fun. A lot of really brilliant people in the space, doing some really cool things, and a lot of work to be done, both with legislators and with regulators. So there's no shortage of conversations to be had about digital assets in Washington.
Well, let's explore that notion of established rails in the traditional finance space. In your opinion, what are the most significant differences between the regulatory environments of traditional finance and the crypto industry? And are there any lessons that crypto can learn from traditional finance in terms of regulation?
Yeah, I mean, look, I think the biggest difference is that the regulation of traditional finance is very longstanding. Many of these rules have been on the books for many decades. I think an important lesson for crypto to take from the regulation of TradFi is that often when these laws, excuse me, are passed, it's very difficult to walk them back. It's hard to legislate. We have, Congress is a very deliberative body. It's hard to get something done, and it was designed to be that way. But when you do pass a sort of landmark financial regulation, it takes many years often to make even small changes to it. So it's critical that we get it right. And in crypto's case, we have sort of a dynamic where it's both critical that we get it right, because we know that it's hard to come back and make changes. But it's also critical that we do it quickly, because we're seeing other jurisdictions move along on establishing a more hospitable environment for crypto companies to set up shop. And we want them to stay in the U.S. We want to keep that innovation here, for economic growth, for financial stability and national security, for job creation, all the things. We want to have it here. So we have to sort of balance those two priorities of speed and the need to create the certainty for the market and for industry participants, but also making sure that we're doing it in a way that is thoughtful and reasonable and is not going to need a lot of tweaking over the next few years, because that can be challenging to do, as we've seen many times in TradFi.
I heard an example today that's very simple but quite powerful, and it describes the need at the time in taxi cabs to have running meters. Before running meters in taxi cabs were mandated by either the city, the state, or the local jurisdiction, passengers could be taken for a ride, pun intended. And the introduction of meters was quite important to developing that level of consumer protection. Nowadays, with the advent of social media ride-sharing apps, meters are no longer required in cabs, but yet cities and states and local jurisdictions could potentially take a similar approach, sort of doubling down on a need for a meter. That would be a bit of a disconnect for the technology that is advancing the ride-sharing app space. You mentioned at the outset of this podcast how crypto is building a decentralized platform. When thinking through regulation and policy, are we falling into the same trap of trying to double down on meters in cabs? do we need to think about regulation in a different way that serves this digital transformation that our society is rapidly approaching, or smack in the middle at this very moment? And do we need to sort of rethink how we inform policymakers and regulators as an industry to try to get them to understand that while traditional finance rails of regulation are adequate for some applications, they are not for others?
Yeah, I think the meters and taxis is such a great analogy. I'm really glad you brought that up. Another one that's even more extreme, but I think really goes a long way to sort of paint the picture, that I've heard recently is, back in the early days of transportation, there may have been a consumer protection law that required that a horse must be attached to the front of any sort of transportation vehicle. Obviously, at some point, cars were invented with engines where you no longer need a horse attached to the front. If you kept a law on the books that said you must attach a horse to the front of a transportation vehicle, you've completely negated the technological innovation, right? And I think that the meters and taxis is a similar example where we have a case now where we have existing securities laws that have that serve securities well in existing markets. But the innovation that comes with crypto and with blockchain technology, where you don't need the same intermediaries with respect to clearing and custody and a whole host of things, if you continue to require them by forcing crypto into this box of existing securities law for which it was not designed, then you're making the technology, you're sort of losing the innovation there. So it's critical that these things are updated, and this sort of goes into what Chairman Gensler at the SEC has said many times, that he's saying we'll simply come in and register. But I think we know that in the case of crypto in the digital asset space, there are companies that are saying we can't comply with the regulations that you're asking us to comply with based on registration at the SEC right now. So they need to be updated to make sense for this industry. We know that there are a number of efforts underway on Capitol Hill to pursue some of those updates. There have been a tremendous amount of approaches considered in terms of sort of rewriting, rules from the ground up for the digital asset space versus updating the existing laws that we have, and sort of all the political dynamics and considerations that go into each of those. But there's no question that updates need to occur, and there need to be, a special set of circumstances for this new industry, that the innovation is really the ability to decentralize some of the way that we do things. So we're hopeful that we're going to see traction on getting really a bill passed in Congress. I think it's clear at this point, based on the actions of the agencies, that legislation is needed, and I think there's really broad recognition of that from members of Congress that have been focused on these issues. So we know they're working on it. We'll see, I think, the reintroduction of the Lummis-Gillibrand legislation next month. We know that Chairman McHenry at the House Financial Services Committee is really focused on his committee's jurisdiction with respect to the SEC and securities laws. And they're working really closely with House Ag as well to ensure that they're kind of each addressing their jurisdictions. Ag, of course, having the CFTC jurisdiction of digital commodities, and hopeful that they can sort of move together with a comprehensive package that would really create the clarity and the transparency that the industry has been begging for since at least 2018, if not before.
Yeah, it also calls to mind an article that I read about a month ago from your exceptional colleague, Linda Zheng, who references the derivation of red flag laws and what
Yes.
that actually meant. Would you like to describe that at all? Or
Sure. So she, this was all consistent with what we were just discussing, with the taxi meters and the horse attached to the front of a buggy. She describes red flag laws at the beginning of automobiles, I think in New York City, and the requirement that there must be red flags ahead of automobiles because everybody was so concerned about the safety hazard posed by automobiles in the city, and they were concerned about this sort of new technology creating risk for them, and that's sort of I think a good way to think about, or a good reminder in how we're thinking about crypto too, that there are risks associated with new technology. There are things that need to be addressed and regulations that need to be established to make sure that people are protected and safe. But that doesn't mean that the technology itself is not innovative in a way that we really need to, try to harness it, because the potential and benefit are going to outweigh the risks, tremendously at some point.
Thank you. And congratulations, by the way, on the half and half. Let's talk about the first half of your career experience and the extensive experience you have and had working in the U.S. House of Representatives and Senate in key financial services roles. I guess you have a tremendous insight that you might be able to share with our audience. I'm really interested in your perception of how cryptocurrency and blockchain technology will evolve over the years within the U.S. government.
Sure. I mean, like I said earlier on in our discussion, when I was on the Hill, crypto was something that was only vaguely understood to even exist, much less discussed in a serious way in terms of how it would be integrated into our economy and how it would be regulated. So things can change quickly. Certainly with technology, we know that developers and builders are working rapidly to discover new ways to do things. We're sort of in a crypto winter right now, and we think about it like this is kind of when crypto tourists really exit, and the real developers and builders kind of put their heads down, and this is where we get really exciting innovations. So I think there's no question that it takes time on the Hill for members of Congress to really sort of wrap their heads around new technologies and what they mean for their work in writing, the laws that regulate them. But it also happens quickly. I mean, you think back to the advent of the internet and some of the debates and discussions that happened on Capitol Hill about whether or not the internet was going to be a useful tool, going to be something that really took off. And it actually took decades for the internet to really become ubiquitous for everyday folks to use it in the way that we do now. So I think there's really recognition of that amongst policymakers and amongst their staff. But it all comes down to sort of how we embrace it here, and if we don't. And we're really concerned about some of the actions of the agencies and of the administration, some of the statements out of this administration that suggest that we don't need it here in the U.S. And we just think that would be incredibly misguided. And we're fortunate that there are, a number of champions in, roles thinking about these things, certainly on the committees of jurisdiction, that want to make sure that they do keep the innovation here, and they acknowledge that, and they want to understand, what the potential is, what the risks are, and how they need to, react in their positions as lawmakers. So there's a lot of education that has to be sort of ongoing because it's changing rapidly. I mean, it's a lot for folks to keep up with, even that work in the industry. I think it's been a learning curve for me coming from traditional finance to crypto. So you can imagine, as a member of Congress or a staffer, you're sort of an inch deep and a mile wide on a number of things. So it really is incumbent upon the industry to make sure that we're providing, really credible, data-driven information about the possibilities, the potential, the risks, the adoption, all of the things that members need to sort of assess as they're kind of coming up with their positions and their plans to move forward in legislating.
Thanks, Brett. I did say we were going to come back to whether we guard innovation here or chase it overseas, and you've given me the perfect segue to dive into that topic. So just yesterday, the economic report of the president was released. The White House report presents a negative view of digital assets, highlighting unfulfilled use cases and potential risks to consumers and the financial system. And this may actually indicate a shift in the Biden administration's stance, moving from neutrality to a more adversarial approach towards the entire crypto sector. On page 266 of the 513-page report, I'll summarize their perspective. Now, again, these are not their words. It's my summary of their words to give our audience a little bit of a break. But essentially, it says that illicit finance risks in the crypto asset space arise from their use in ransomware attacks, human trafficking, child exploitation, drug trafficking, financing rogue regimes and terrorist activities. Crypto assets, according to this report, allow for easier laundering and obfuscation of payments due to their pseudonymous nature, and additional risks stem from gaps in international AML and CFT standards implementation, anonymity-enhancing technologies, the absence of financial institutions as intermediaries in some transactions, and non-compliant service providers. When crypto asset firms, according to the report, fail to adhere to regulatory obligations, criminals can more easily exploit their services and circumvent sanctions. That's a lot.
That's a lot.
Given the recent economic report of the president, which presents this negative view of digital assets and outlines these various illicit finance risks associated with them, how do you believe the crypto industry should address these concerns, and what steps can be taken to ensure regulatory compliance without stifling innovation in the space?
You know, we were pretty disappointed by the release from the White House. It seemed pretty short-sighted and, as you said, pretty negative about the potential of the technology. And it seemed to lack recognition that the technology is here. It's being developed. It's being used. It's being adopted. You can't put that back in the box. So we need to figure out how to regulate it, how to embrace it, how to make it work for our economy. With respect to illicit finance, and you know, we hear these criticisms a lot. I think Chainalysis in their most recent report, you know, Chainalysis, of course, an analytics company. I think that their most recent report said that less than 1% of crypto transactions are actually used for anything illicit.
It was 0.24%, which is less than a quarter of 1%.
So, you know, any amount of illicit activity is not good. We don't want that. We want to take steps and make sure that there are rules to prevent that. But the reality is that there are bad actors in every form of finance. We fully support at the Crypto Council rules and regulations that make that more difficult. With blockchain, though, you know, law enforcement actually finds blockchain to be a really helpful way to track criminals, because if you've ever looked at a blockchain and looked at wallets, you know, it actually is pretty transparent in how you can see the connection of transactions. So there's actually a lot of ways that, you know, crypto companies are helping law enforcement to look at not just sanctioned entities, but then what sort of other entities those entities are connected to in a way that is harder to do with traditional finance. So we acknowledge that illicit finance concerns are very real and they need to be addressed. And policymakers are thinking about the best way to address those when, as you said, there are not as many intermediaries. Taking out intermediaries is both a tremendous opportunity and a tremendous benefit for consumers in terms of cost savings and efficiency. But there are also other circumstances that need to be addressed and other risks that need to be addressed, given that change in dynamic. So we appreciate that work is being done, but I think the characterization of crypto as just being for illicit finance is akin to, you know, 30 years ago saying that the internet was just a place to watch pornography. It's not, I think, a well thought out view of the potential for the tech, not just in finance, but beyond finance in the way that we do so many things. So, you know, we're looking at the report, as you said, it's 500 and something pages. We're doing a deeper analysis and we'll be coming out with something to respond to some of those specific points with our positions and with what we view as sort of the reality of the industry and where things are headed.
You know, in some ways, it's a backwards-looking perspective and narrative to punish, judge, and sanction a technology simply because it might be misused. All technologies are misused, unfortunately, whether that's the internet, the telephone, the cellular phone, the dollars in your wallet, the real estate that you purchase, the vehicles that you drive. All of those can be tools for money launderers and illicit financiers and traffickers, but yet we don't shut down those technologies. We don't chase those technologies to the far corners of the earth where they might be actually less regulated. So when we think about, as an industry, educating regulators and policymakers here in the United States, and you made the really good point a couple of minutes ago about how data analysis will be critical to effective education on the Hill and at various agencies. Is it your perspective, having worked in government, that policymakers and regulators need a grand education on crypto, its use cases, and the value of this technology? Or do they already have a grasp of that and it's the fine tuning that's needed? I'm struggling to understand what level of education is really necessary.
Well, I want to respond to the first point that you made about tools for criminal activity.
Please.
And you're absolutely right. I mean, how often do we all now get text messages from someone saying, "Click this link and this is your reward," or "this is," and we know not to click it. There are some people that probably click it and are victims of a scam or whatever. I don't know what the ultimate goal of those are, but we don't say because of that we can't have text messages. I think about it very similarly, as you said very eloquently, that there are so many technologies and innovations that have brought so much benefit to our way of life and doing things that also come with risks and opportunities for bad guys. And there are bad guys everywhere, right? In every space. And we need to take steps to make sure that they have a much more difficult time accessing consumers and investors. And we believe that having a regulatory framework would prevent that, would certainly mitigate it and make it more difficult, more challenging. But to answer your question about the level of education amongst members, I think it varies tremendously from member to member. There are some folks who have been, interested in the crypto space for several years, and so they have a much deeper knowledge. And then there are some folks who are really just now starting to pay attention to it because of all the attention that it is getting on Capitol Hill and the various legislative proposals that are out there. So I think from an advocacy perspective, it's very important that as an industry, we tailor some of our education. I think, as a former Hill staffer, when I was young and I was 24 and trying to figure out financial services policy, you go to a briefing or some type of meeting and the information is way too granular. It's way too weedy. And you're like, well, I feel like I didn't get anything out of that because I didn't have the correct foundation. I needed to start at the basics. So I think we need to make sure that we're being mindful of that there are some offices, certainly, off the committees of our jurisdiction, who've been less focused on it and really need to start with the basics of the potential for the technology, where things stand. And then there are some that are well beyond that, and we can go a little bit deeper into the very specific questions about securities laws and the specific legislative proposals that might be out there that we support. But it has to be tailored, with everything that we do. And I think that's important to remember.
That's great. And my colleague and co-host of this podcast, Paul Brigner, is actually thinking through effective ways to increase educational opportunities on the Hill. And I imagine sometime in the near future, we will have some pretty strong initiatives in order to be able to have that meeting of the minds with policymakers and regulators in order to solve for this very complicated space. I would like to come back to use cases. And one actually doesn't need to read the entire economic report that the White House released, the 533 pages, many of which are footnotes, by the way. All one needs to do is to go to the table of contents. And the table of contents describes essentially that there are no use cases for crypto. One of the most powerful use cases that a lot of organizations are working on is related to financial inclusion. And in your view, I'd like to understand a little bit better about how the crypto industry can contribute to financial inclusion and access for underbanked populations globally.
Sure. Well, the reality is that in this country, we still have a lot of people who are what's characterized as unbanked or underbanked. And that's can be for a variety of reasons. We saw a tremendous amount of brick and mortar bank branch closures during the pandemic. So for some folks in rural areas, they just don't have a bank branch that is close by. There are historically underserved communities that have been less willing to be involved in legacy financial institutions because of, history of discrimination and redlining and there's no question that the financial system that we have today with incumbent actors has not worked for everyone. In the case of crypto, the opportunities are really to reduce costs and increase efficiency. And I think there are a lot of folks who are more interested in something that does have the potential to be more peer-to-peer and less intermediated by a big bank that's been around for 100 years. So the reality is that in the United States, the technology is not yet, widely adopted in those communities because we need the regulatory framework to provide the consumer confidence to folks to know that there is a cop on the beat, making sure that bad actors are not, the predominant players in the space. But if you look internationally, remittances, for example, is one that is used a lot. The cost of remittances is significantly lower through crypto than a traditional remittance, and that's a real cost savings to both folks living in America that are sending money home and back and forth, and internationally. So there is a ton of potential. I think it's fair to say that it's not fully realized yet, but that doesn't mean that it won't be as development continues and as we get the clarity that's needed really for consumers and investors and for folks developing the tech and the opportunities for people.
I think we also sometimes forget that in the United States, we have this luxury of many individuals in our society having access to banks. They have bank accounts, they have credit cards. We live in a society that, as of now, does not have hyperinflation.
Right.
So when you talk about remittances, being able to get money from this jurisdiction to another that actually has hyperinflation, avoiding the 5 different banks in that process and getting it there without fees taken out at each one of those 5 different parts of the process in a fast amount of time, within minutes, instead of a week and a half, means that the 99% or more of that money will get to that individual, rather than a week and a half later after all the fees are taken out. And now, because of hyperinflation, the value of that money has devalued by half, let's say. So to me, this seems to be a no-brainer use case that blockchain and crypto can fill. It's presently not being filled by the traditional finance system. And I would hope that this is something that would resonate with policymakers and regulators. But I'm not quite sure that it is. There are champions of financial inclusion in the United States Senate and in the United States House of Representatives, but they're not thinking about this use case. In fact, they're quite very much on the opposite side of this, saying that it's actually a danger and a problem, and it's a severe and critical matter of consumer protection. How do you reconcile the views of champions of financial inclusion not understanding and appreciating this tremendous opportunity we have to have people lift themselves up by their own bootstraps?
Yeah, I mean, the scenario you described in cases of jurisdictions with hyperinflation and folks sending money back and forth, that's so meaningful for real people. But I think you're exactly right that for some reason, those international examples are not resonating as much with policymakers in the United States as we would expect them to. I think what happens oftentimes is there is a conflation of sort of the speculative investment of cryptocurrency with the utility of blockchain and crypto. And there are some that look at the assertions of the possibility for tremendous financial inclusion, and they say, well, that seems predatory because look at all the losses that have occurred. And that is conflating sort of the potential to revolutionize the way we do things and really use crypto for payments in a way that tremendously decreases costs and increases efficiency, and reduces friction in those transactions. And then the idea that, you can buy Bitcoin and it may go up and it may go down. And those are two very different things, both of which people can do. But when we're talking about, really having peer-to-peer transactions that do cut out as many intermediaries, as you said, sending a remittance where, 5 different institutions are taking what may be a small cut, but when you do it times 5, it adds up. Um, versus a remittance through crypto that may cost 1 to 2%. That's a meaningful cost savings to people that really need it. And that's just a very different thing than, a speculative investment in a specific cryptocurrency that may go up or down. So I think that, again, it's very important that folks working in policy in Washington and embarking on some of these education efforts, as you mentioned, it's important that we make those distinctions and that we are really explaining the real savings and benefit that comes with some of the ways that crypto is already being used and the other opportunities and potential that can exist, here in the United States and globally. The reality is that other jurisdictions are embracing this. Other jurisdictions want crypto to be there. There's been a lot of talk for a while now, but certainly more recently about MiCA and the EU and the final vote that is expected on that legislation next month in April. They're moving ahead, and that's a pretty good framework. There are companies that are thinking about, what does that mean for being domiciled in the U.S. versus somewhere else, and that can be a big problem for U.S. in terms of our national security, our financial stability, a number of things. So we're hopeful that we sort of right the ship in that way. But I do think that a lot of education is needed in an ongoing basis, and to make some of these examples really, resonate with folks who are thinking about what the use case and potential is, because there's no question that it's there, but it is a nascent industry.
And thank you for raising, MiCA, the markets in crypto assets regulation that has been introduced by the Trilogue of the European Commission, the Council of the EU, and the European Parliament. There's also the anti-money laundering regulation that has been introduced, and there's a little bit of a battle between the European Parliament and the Council at this stage. And I think we're going to see a vote around March 28th, and it's yet to be seen how custody of assets and the regulation of the peer-to-peer space that you referenced and the self-hosted wallet space will play out. So it's still very much a work in progress, but I do agree with you that it would appear that the European Union is well ahead of the United States in thinking through how it regulates crypto assets, how it thinks through even passporting jurisdictional compliance by complying in one member state of the European Union and then potentially being able to leverage that elsewhere throughout
have
the
sort of
larger
reciprocity.
region. Yeah. It's really, in fact, their struggles and their complexities might arguably be even greater than ours, given the structure of the European Union. And it's remarkable that they've been able to make such quick progress. Why do you think that is? And why are we so slow here in the United States to come up with regulatory clarity? Those are your words that you used earlier. You have an insight, having worked in that arena. Can you shed some light on this?
I think that a big challenge is the jurisdictional fights that we've seen in the space for a while. And I think that we are getting to a point where everyone is sort of acknowledging that they need to come together, sit at the same table, and figure out a path forward. A lot of, brilliant, thoughtful people in all of these sort of different corners that are thinking about these things. But it's been difficult figuring out, how do we define a security? What's under the SEC's jurisdiction? What's under the CFTC's jurisdiction? And there's a lot of disagreement about that amongst, certainly the two agencies, but also the committees of jurisdiction that are authorizing the laws which impact them. And it's no surprise that each committee wants to sort of keep their piece of jurisdiction and wants to think about it through that lens. But we need to sort of figure out those dynamics sooner rather than later and determine how to sort of all move forward with something comprehensive. And as I said a little bit earlier in this conversation, I think that is happening. I think we're seeing some really positive signs that is happening. But, to be perfectly honest, it's been challenging, I think, in the industry even to define, what is decentralization. We all agree that Bitcoin is decentralized. in the DCCPA, the Senate Ag bill to give the CFTC jurisdiction over crypto spot markets last Congress. They said sort of that Bitcoin and Ether were commodities. They were digital commodities, but they didn't really explain exactly why. And that's really challenging to do because, as we know, decentralization is such a spectrum. There may be a token that at issuance is clearly a security, but then over time becomes completely decentralized, more decentralized, and it's hard to sort of put a finger on where in that life cycle it truly becomes a commodity versus something more like a security. And then there are some who want to say that, digital assets are just something else altogether, and they're neither of these things, which creates a whole sort of new set of challenges in terms of legislating and regulating. But these dynamics are really complicated. I think there are a lot of smart people that have been working for a long time on trying to figure out the path forward, and I think that we're seeing really great progress to get there. But I think it has made it a more deliberative, slower process here in the United States, and now we are behind. But again, I think there's recognition that we need to move quickly and catch up. So we're hopeful to see, more action in the coming months and certainly this Congress.
Thank you. And since you mentioned global efforts, what role do you see blockchain and cryptocurrency playing in the broader global economy in the coming years?
Well, listen, I think as the technology becomes more widely adopted, and our traditional payment rails are sort of modified by this technology having more of a role, then it's cross border, right? It functions differently than the way sort of traditional transactions do. So that's why it's all the more important that we do have, some jurisdiction over the development and the regulation of it here in the United States. One example that we use is, every time you pick up your phone, you go to a website, you accept the cookies. And that's because the EU moved first on the legislation that ultimately led to these cookies notices, and the United States just sort of took what they did, right? And we don't want that for the US. We're supposed to be the leader in tech. We're supposed to be the leader in finance, certainly. So we want to make sure that we are the ones that are developing how these things are going to be done and not just adopting what another jurisdiction did before us. But I think it's important for our ability as the US to enforce sanctions and to have sort of some control over the global financial system to make sure that we really have crypto here. And an example that we've been sort of discussing and looking into in more detail recently is what's happening right now with semiconductors, with chips. That we realize now, we certainly learned throughout the pandemic that we're extremely reliant on chips for everything that we do. And we probably couldn't have contemplated 40 years ago just how reliant we would be on chips. But during the pandemic, when we couldn't get chips as easily and people couldn't buy cars and auto manufacturers couldn't sell cars, I think there's been estimates that for auto companies, the losses were in the billions because they had cars that were sitting there and couldn't get the chips that they needed. The vast majority of chips, as we know, are manufactured in Taiwan. They were developed here in the United States. And as sort of much of manufacturing moved overseas, so did chip manufacturing. And now there's suddenly this acknowledgement that we really need to have some of that here in the US that we're controlling and that we have, immediate access to, and we're trying to get it back. But it's hard to do that once something leaves. And that's what we don't want to see happen with crypto.
And certainly the CHIPS Act is a powerful feather in the cap of this present administration. Friends of mine in the United States Department of Commerce have commented that this may be one of the most important things the United States has done in a decade. And I think it's a recognition of the importance of technology. So here we are embracing and solidifying United States leadership in technology in one sector, but chasing it away in another.
Yeah, I mean, hindsight's 2020. Like I said, we didn't know that chips were going to play such a critical role in everything that we do. Now we know that, and we're taking steps to try to get it back, to have more of it here in the U.S. And that's great, and we commend the administration for doing that. But it would be better, we think, in the case of crypto, just to not run it offshore in the first place. And the reality is that just because it's offshore doesn't mean that Americans don't have access to it. So with digital assets, you have companies that maybe are forced to move out of the US and sort of domicile elsewhere. But they're still going to be able to access US investors and consumers. Um, and just sort of the economy that we have now, a global digital economy, that's going to happen. So it makes a lot more sense. To me, it sort of defies logic not to want to keep it here and regulate it, even if you are a crypto skeptic or opponent, or you just want crypto to go away altogether. Whether you are super supportive of crypto or you have a lot of concerns, it's sort of in everyone's interest to keep it here where we're controlling, as the United States government, how to regulate it, how to look at it, and having a lens into the markets.
This next question might challenge the half and half dynamic that you described about your career. As someone who's transitioned from traditional finance to the crypto space, how do you envision the relationship between these two sectors evolving in the future? Do you see more collaboration or do you see competition between them?
I think it's both. I think that's been the case for many years with sort of all fintech. You've seen a lot of traditional financial institutions acquire fintech companies, partner with fintech companies. They also compete with them. So it's a complicated relationship. I think in the case of digital assets, what we've seen from prudential regulators has been so discouraging for banks to be involved in crypto at all. It's a really a critical problem for the industry right now. So you have and it's sort of two separate issues that are very related. One being that, regulated banks to this point through Basel and through domestic regulators here have basically said, if you have any actual crypto on your balance sheet, the capital treatment of that is going to be so punitive that you're never going to want to do it. So they're getting signals that you just can't be involved in crypto from a regulatory perspective. I don't think that will always be the case, but to this point, that's sort of where we've been. And then the other related issue is that we've seen, recent statements from the prudential regulators really discouraging banks from even providing dollar-denominated deposit accounts to crypto companies. It's become more challenging for crypto companies to get just regular banking services, which is a huge problem. And as we've seen with the banking failures over the past couple of weeks, concentration risk is a big concern. If you're discouraging a diverse number of banks from being in any one sector, whether it's crypto or something else, if there is a downturn, then that risk is all concentrated somewhere and creates a big problem. If it's spread out, you don't have the same risk. So we worry that, the problem that ostensibly the regulators are trying to prevent, they're actually exacerbating by discouraging more banks from being in the space. But to your original question about TradFi getting sort of more into the space, I think that they would certainly like to, but they just haven't had sort of the regulatory leash to do it to this point. And we're very hopeful that changes. I think there will always be an element of competition. And when we're talking about disintermediating, that, sort of by definition is creating less of a need for some of the legacy institutions and the incumbent players that we have. But it is a question of whether or not they're going to find a way to sort of harness the technology and evolve their business models to embrace it, or if it's all going to happen sort of outside of that space. Our view, as we've discussed at length in this conversation, is that we should bring crypto into the regulatory perimeter, certainly allow it to be a part of the banking system, which is designed to be a risk absorber, not, a risk excluder, so to speak. And that we should, look at all opportunities for companies and innovators to invest in the space and develop the space, and bring the benefits of the technology to their clients and customers.
Your answer has reconciled that dynamic for me a little bit. Thank you. But let's assume that there are individuals in the traditional finance space that want to come over to the crypto industry. Do you have any advice for them considering a move to the crypto industry? And what are the key aspects they should be prepared for when making this transition?
Be ready to be in the trenches. In the crypto space, there's a ton of excitement. There's something new every day. It's a fast-paced world where we have a lot of attention from policymakers, from industry, from Twitter. We haven't even talked about crypto Twitter, which is a new thing for me coming from TradFi that's not as active on Twitter.
Feel free to give your Twitter handle.
My Twitter handle is at Brett W. Quick.
Wonderful. I'll be following.
Thank you. I appreciate that. I've just in the past, several months, become slightly more active on Twitter and embracing the tool that is there, which is without question. But there's a lot of activity in the crypto space, and there's really never a quiet moment. And it's great because it means that a lot of people are paying attention to the industry and the technology and the potential, but it also opens up, a lot of criticism. There's been a lot of, high profile events that have happened over the past, 6 months to a year, that the industry is responding to and sort of figuring out what comes next and making sure that policymakers in particular kind of have all of the realities of some of those. So it's a lot of work. It's a lot of fun, a lot of super smart, fascinating people that are really, committed to the technology and the potential of it. But yeah, you've got to be ready to really dive in head first.
And now that you're with Crypto Council for Innovation, are there any specific policy goals or initiatives that CCI is currently focused on that you're able to share with us today?
Sure. I mean, all of the sort of major proposals that are out there, we're supportive of some form of that. Certainly, we'd love to see stablecoin legislation move to establish, what the rules are around, licensing of a stablecoin issuer. Those conversations, I think, are ongoing on the Hill. So we may see a draft, hopefully in the next couple of months, and see some movement there. Certainly with the sort of market structure piece, as it's being referred to really, provide the clarity that's needed in terms of the SEC's role. What is the security? How does crypto fit into existing securities laws? What's the CFTC's role? What's a commodity? Who has jurisdiction over these markets? What does custody look like? All of these things, we're working with lawmakers and their staff on a daily basis on trying to answer their questions, provide feedback and information, determine, as an industry amongst our members, what are, our collective positions and some of the nuance of the proposals. But, like I said at the beginning, establishing the clarity and the transparency and the badly needed consumer protections so that bad actors are not able to access the market as easily. That's our number one priority at CCI. So we want to be really pragmatic and thoughtful about how to achieve that, recognizing that, it's hard to legislate and nobody gets everything they want. And it's a political process and concessions are made and horse trading is done. But at this point, having a framework is critical. And that's what we're supporting. And we're supporting sort of whatever effort we, certainly has the sort of thoughtful and reasonable elements that we need to see in protecting, for example, DeFi, which was a big debate at the end of last year, but something that, is realistic and can get over the finish line. So a lot of work and education is ongoing, continues to be needed, but I think everything's sort of heading in the right direction.
How do you see the regulatory landscape for crypto evolving in the next few years, both in the United States and globally?
Well, I think that all depends on, some decisions that are made here in the United States. We would very much like to see legislation passed at this point that, requires that the agencies go through a formal rulemaking process, which we have not seen yet in the crypto space, and sort of abandon the regulation by enforcement, which doesn't protect investors or provide transparency to the industry. So we're hopeful that, the evolution will be that we actually have a regulatory framework here in the U.S. That we're missing now. We certainly have, state regulation and FinCEN at the federal level and sort of a patchwork, but we need something comprehensive in order for companies to really be confident in setting up here and growing here.
And how important is international cooperation and coordination among different governments and regulatory bodies when it comes to cryptocurrency regulation? I think we all saw that there was a congressional delegation that recently went to the European Union to talk to regulators in the EU. And I guess there are pros and cons to that. In some sense, I guess there's an argument that we should be developing our own regulatory structure. But on the other hand, maybe there are lessons to be learned from how the EU has gone about their regulation, and the pros and cons of their approach.
I think that congressional delegation that you mentioned was definitely doing their due diligence to understand how they develop some of the provisions of MiCA, what are the pros, what are the cons, how does it translate to the way that our laws are formed and how they function here in the United States with the agencies that we have. And so we may see some adoption of some of that, and I think we'll also see some things that are very different, just recognizing that our existing laws are different and our agency structure is different. I think international coordination and cooperation is really critical. I mean, we have a number of sort of international standard setting bodies that the U.S. Has an active role in, and those turn out to be pretty important. When we often see in the U.S. that regulators will sort of come back from those meetings, and in the traditional finance space, we've seen something that we call gold plating, where they come back from the international standard setting bodies and sort of slightly increase to more largely increase some of the rules that are agreed to there. So I think it's important that the U.S. has a really active role in those bodies and that there is coordination, because as we've said, this technology is going to be very cross-border, and it's going to matter for the ability for things to be sort of interoperable, that some of that is well thought out in advance. But we do have sort of a different structure here. So I think that the folks that are writing these pieces of legislation are mindful of that.
So my next question, I almost don't want to ask, and
Great.
perhaps I'll switch it up, because what I wanted to ask was, how can the crypto industry work collaboratively with governments and regulators to create a more favorable regulatory environment? But maybe the question I should be asking is, should the crypto industry be working collaboratively with governments and regulators to create a more favorable regulatory environment, given that certain jurisdictions have apparently, as we discussed earlier, declared war on the crypto industry? And we've fought the crypto wars before and won, but yet here we are again fighting crypto wars 2.0, trying to preserve encryption, cryptography, the ability to communicate securely, the ability to transact securely without your friends, your neighbors, your mayor, your family, your employer knowing the entire history of your financial transactions. There must be a way for modern societies to develop secure ways of communicating and transacting. But yet, certain jurisdictions have not found that to be a value add for society. Rather, they're more focused on surveillance, let's just say it, control, and the ability to run for themselves in a more, or let's call it a less sophisticated way than private industry could potentially run with a new technology. CBDCs is a good example of that. Governments worldwide are now racing around to develop their own central bank digital currency, which will essentially be a way to watch and track private, personal transactions of every citizen in their jurisdiction. So which question should I be asking? I'm not quite sure
There were a lot of
anymore.
questions in that question, I think. I mean, what we haven't talked about in this conversation is China. And when you talk about a CBDC used as a tool for surveillance, China is like flashing in red lights. I think with CBDCs, as you said, different governments are thinking about how to develop them and whether or not they're needed. I think we need to be very thoughtful and careful in the U.S. about considering something like that. It's certainly fair to consider what a government tool in terms of a digital currency would look like and how it would function, but there are privacy and surveillance concerns. It certainly shouldn't be in lieu of, private issued stablecoins, for example. In terms of, I think your first question or second question maybe, about whether or not we should be working collaboratively with governments and regulators, I mean, I think the answer is absolutely yes, because what's the alternative? At some point, you can't fight City Hall. I think there was recognition, as we said earlier in this program, after the infrastructure bill that, if you're not at the table, you're on the menu. So we have to be at the table. We have to be constructive. We have to recognize that the reality is that, and this maybe wasn't the case at sort of the original inception of anything in the crypto space, but the reality is that for the industry to really be widely adopted and ubiquitous here in the US, we're going to have some form of regulation, and we need that. And so it's our job to make sure that policymakers that are crafting these regulations, that they really understand why it's so critical that we get them right in a way that that innovation can happen here in the US. It's something we're super focused on at CCI, that, allowing the technology to be completely offshored would be incredibly short-sighted and potentially very detrimental to our economy down the road. So, our mission is certainly to work very collaboratively with governments and with regulators and help them understand why this is so important and what the, tremendous potential is. There's a lot of focus on the risks and the losses. And that's what sort of, it's kind of clickbait, it's headline grabbing. But that doesn't, change the reality that the potential benefits will far outweigh those risks once they've been able to be, truly realized, and our financial system is potentially really revolutionized.
Thank you. In Rohinton Mistry's award-winning book, A Fine Balance, he talks about a fine balance between hope and despair. We've had a little bit of despair in this podcast, but maybe let's end on hope. How can the responsible regulation of crypto unlock its potential and improve lives across the globe?
Well, I think it's all the things that we've outlined in this discussion, the opportunities to have more peer-to-peer transactions, which inherently, cost less and are faster for just average folks trying to send money and transact. We often think that, like Venmo, for example, that, I can send you $10 right here and you pick up your phone and you got $10. But that's not really peer-to-peer. We know that we have Venmo in the middle of that. We have both of our financial institutions in the middle of that. Each of our financial institutions are scraping all of our data to see everything that we spend money on and everything that we do. So the opportunity to take some of that out to increase, our own personal data ownership is tremendous. There's a huge benefit for that consumers can really realize. But we need the consumer confidence. We need protection of consumers. We don't want to see harm and losses, occur to real people. And sometimes that's lost in the conversation, that there are real people that have been defrauded of their funds, and in cases of sort of classic fraud that have been illegal for 100 years. But without the regulatory framework, without the oversight of sort of a cop on the beat, then you're going to have bad actors that try to take advantage of that market and people that want to be in the market. So we want to see that mitigated by a regulatory framework that really creates clear rules of the road. We often say, tell us the speed limit and we'll drive it. If we don't know the speed limit and we just drive whatever we think is appropriate, and then the SEC comes in and says that wasn't the speed limit, but also we're not going to tell you what the speed limit was, we're just going to tell you that you didn't drive what we wanted you to drive, then that's not informative to other market participants that are trying to take lessons from some of the actions of agencies. And it just makes it really impossible for companies to operate here. And we want the economic growth. We want the job creation. We want the opportunities for our consumers and folks in the United States. And we also want the national security and, economic security benefits that come from having control over it. So there's a lot at stake, but it's exciting. There's a lot being built. We're going to see a lot of development over the next, years to several years to decades. Who knows where it takes us? But that's why it's just so important that we get this right now. We do it quickly, but we do it, thoughtfully.
What a hopeful place to land. Thank you very much. Paul and I were thrilled to have a chance to have you on the PGP for Crypto podcast. You've been such an expert, and it's invaluable to have your insight from your work in government to your work now with the Crypto Council for Innovation. Brett, if individuals, our audience, members of the traditional finance space, members of the crypto space want to interact with the Crypto Council for Innovation or learn more about what CCI is doing, how might they best do that?
Yeah, sure. So, CCI, we're very active, as we've discussed today, at the federal level with Congress and with the regulators. We're also super active at the state level, what's going on in New York and California and Illinois and so many states. There's a lot of activity there. So we love to hear from folks, all over the country. We're also the only trade association that really has a global footprint and a global perspective. So we'd love to hear from folks. Please follow us on Twitter at crypto_council. My Twitter handle is at Brett W. Quick. If you're inclined to follow me, please reach out. We would love to hear stories and anecdotes and get to know folks better that are following the space. We do have, traditional finance also in our membership. And we're really thinking about, how crypto and new entrants and existing entities can really sort of embrace the technology and how it fits into our economy moving forward. So we'd love to hear from folks.
Thank you very much for being a guest on our podcast.
Thanks, Gary. It was great to be here.